Alaikum, and welcome to our session on investing in climate change resilience, the opportunities for takaful. In this final session, I wanted to take you out of your comfort zone a little bit into a disaster zone by exploring particularly the topic of climate change and how we can build resilient communities the world over using takaful. And of course, that's one of the things I won't have to teach you anything about. You know this better than me. I'm Mohamed Kroessin. I am working for one of the UK's leading Muslim charities, Islamic Relief, and we are working with takaful to enhance our humanitarian programming, but also our development program. But apart from myself, you're also in very good hands this morning, breaking with the summit format slightly. Just to keep you excited before lunch, okay, this is a difficult slot. I would like to introduce, first of all, Matthew Foote, who is a senior financial sector specialist in the World Bank's Crisis and Disaster Risk Finance team. He's based in the World Bank's London hub, where he focuses on public assets and resilient infrastructure financial protection, including insurance and reinsurance risk transfer. Matt has worked in around the London insurance and Lloyd's markets for over 20 years as a catastrophe modeler, exposure manager, and analyst, including more than a decade at Willis, where he was research director. He's a trained cartographer, a fellow of the Royal Geographical Society, and a chartered geographer. He has also co-authored a textbook on natural catastrophe management, risk management and modeling, a practitioner's guide. So something, if you want to read up on more on his work, it's available in Amazon, in other online bookshops and the like. And with him particularly, I want to discuss the key challenge of our generation, or in my opinion anyway, climate change, and the World Bank's work on disaster risk insurance. Safder Jaffer from Milliman will then help us, and he doesn't need much of an introduction, I believe, to understand what this might mean for the takaful industry. Safder is Managing Director and Principal Middle East and Africa at Milliman in the UAE, and he has more than 20 years' experience of insurance and reinsurance. Before joining Milliman, Safder was Vice President at Swiss Re, where he worked for 11 years, spending 8 years covering the UK market and 3 years covering the Middle East market. He works extensively serving clients on product design, pricing, valuation, and risk management. I doubt that we have to convince anybody in this room today about the merits of insurance. But what about extreme weather events and the growing disaster risk resulting from climate change? So just to get you to tune into a slightly different wavelength, a quick video from the World Bank about the topic. And I now should be able to operate the wonderful...
This is the story of a young family living in a small community surrounded by fields and close to the coastline. Like millions of other families, they farm the land to make a living. When the harvest is good, the family can afford to send their children to school. But where this family lives, tropical storms are frequent, often devastating, and a constant threat to their well-being and future. Worldwide, millions of people are affected by natural disasters every year, and the impact can be catastrophic. From the destruction of buildings and critical infrastructure to the loss of crops and livestock, natural disasters can devastate lives, communities, or even entire countries overnight. Because of climate change, natural hazards are becoming more severe and more frequent. And as rapidly growing cities continue to expand into harm's way, the financial cost of disasters such as flooding, earthquakes, and droughts increases. Over the last 10 years, the cost of disasters reached an average of $165 billion per year, much more than the $135 billion in official development assistance provided in 2014. And the costs continue to rise. The impact of disasters is felt most severely in developing countries. Disaster response and rebuilding efforts drain already limited resources needed for providing public services and new projects that build the foundation for growth. But the cost of disasters does not have to be so devastating. Financial planning can help safeguard livelihoods and public investments, like schools and roads. Financial protection strategies let governments plan in advance how to meet the cost of disasters, so that the money goes where it's needed most, when it's needed most. Financial protection strategies make it possible to restore access to healthcare, education, and food supply more quickly. Reducing budget drains helps protect a country's long-term stability. Ultimately, it protects lives and the future of younger generations as well. Countries around the globe have already implemented regional strategies to protect themselves financially from the impact of natural disasters. In the Pacific, small island nations have worked together to better understand the risk they face and to take advantage of insurance contracts that provide immediate payouts after cyclones and earthquakes. In Colombia, the government has worked to ensure $38 billion in infrastructure built through public-private partnerships, guaranteeing that the rebuilding costs are covered if damage occurs. Or in Africa, where countries are increasingly investing in protecting their farmers and vulnerable household goods against drought. These and similar financial protection programs around the globe are helping countries, communities, and households and families reduce the devastating effects of natural disasters and build a foundation for growth.
Great. Well, thank you, the World Bank.
This is the story of a young...
helping us to understand some of the concepts and some of the challenges. Well, just to sum up, the direct financial losses caused by the disasters that you've seen out there, and climate change, of course, is exacerbating the hazards such as flooding or drought. They continue to rise. And in developing countries particularly, of course, it's not just the cost, but also the loss of life. Okay? And of course, the international community is responding. UN agencies, it might be the Red Cross, the Red Crescent, international NGOs like my own one, to the tune of $150 million a year, by supporting and providing humanitarian assistance. But with finite resources, especially for multi-mandated agencies, they must increasingly make a choice, either, if you like, to save lives or to fight poverty. And of course, this has obvious implications for the effectiveness of how existing resources, such as the official development assistance that you mentioned there, spend. And as you've seen, we're looking at 135 billion that OECD countries at the moment provide in this official development assistance, compared to an average loss of about 165 billion per annum. And of course, that means there's a shortfall of about 30 billion. That's not to say that there are other factors that have helped developing countries to actually lift themselves out of poverty, but climate change is putting this progress at risk. And there's of course also a massive indirect financial cost that we all feel. You know, research shown, for example, that over 20 million people are being displaced each year because of climate or weather-related disasters. And around the globe, the chance of being displaced by a natural disaster is 60% higher today than it was in the 1970s. And this, coupled with unfortunate man-made disasters, has also increased the pressure on the developed world, not just as a donor, but also, for example, through the number of refugees, i.e. people who leave their home country and try to settle in another. That has risen also to 20 million, and of course the Syrian refugee crisis and the way that the European Union, of course, handling this crisis is a case in point. And on a related note, and I think this is very poignant at the Takaful Summit in many ways, of course, the vast majority of refugees around the world actually hail from Muslim countries, particularly Somalia, Afghanistan, and Syria. And of course, with climate change, we also have to expect, especially in sub-Saharan Africa or in South Asia, that we will create more refugees or displaced people because these places become less livable over time. As a humanitarian, I can assure you that we have some strategies available that can mitigate the direct financial impact of natural disasters by responding fast. Let this be, for example, in the case of a tsunami, where the actual main financial and human loss actually happens 72 hours after, because there might be a cholera outbreak after the tsunami. that causes more loss to life and assets thereafter. We're also working much more now on preparing communities for disaster. So again, in the tsunami example, by, for example, evacuation drills, and also, of course, by improving coastal defenses. So there's a much more of a focus now on what is called disaster risk reduction. Now, you might ask yourself, what has this got to do with takaful? Well, so Matthew, isn't this whole debate really something for UN agencies and the Red Cross, Red Crescent, or other relief agencies like Islamic Relief to deal with? What has this got to do with the World Bank?
Well, first of all, it's an absolute pleasure to be here. Thank you for inviting me. And Mohammed, that was an excellent introduction. I started to wonder whether you really need me after the video, but I'll hope to give some more insight. The question is a good one. For those who don't know the bank particularly well, the World Bank has two ultimate objectives. The first is effectively to end extreme poverty. And we define extreme poverty by those around the world who earn less than $1.90 a day. We aim to eradicate that type of extreme poverty. Our second is to promote shared prosperity. And again, we target the lowest income earning populations, the lowest 40% around the world. And as we said, that tends, unfortunately, to be concentrated in certain countries and regions around the world where there's increased vulnerability as well and exposure to the types of shock events and natural perils which we're talking about today. Climate change and climate shock events have the potential, particularly, to push many, many more people into poverty. They have a very, very poor reputation, obviously, for developing greater problems, not only for individuals, but at sovereign country levels, at regional levels. They have long-term impacts as well as short. And so they're extremely difficult to manage, they're extremely difficult to deal with. That's not even starting to look at whether the frequency and severity of those events is actually increasing because of exacerbated climate change impacts. We think, obviously, that you look at climate change, it could push another 100 million more people into poverty if nothing changes by 2030, which is a significantly large number of people that we need to try and protect. The impacts are huge. Long term, as I said, they can have geopolitical impacts, as Mohammed's already pointed out, displacement impacts. They affect the poorest, as I'm trying to say here. But of course, what the major problem is, of course, that the consequences are that they increase fragility. They increase fragility for local populations, for the individuals, for households, as we saw with the video, but equally for the countries that are trying to manage these risks over time. And so we focus at the bank on those which are most exposed, the low-income and the low-middle-income countries. And we try and reflect the fact that it's not just the poorest countries, even though that is our priority. It's equally those that have some level of income growth, GDP growth, but are equally vulnerable. For instance, putting in infrastructure is an investment. That infrastructure becomes critical to the well-being, fiscal well-being of a country, but it's equally vulnerable to large-scale extreme shock events, particularly in areas where we look at mostly, particularly around the middle-income countries of the Southeast Asia, for instance. So you've only got to look at recent events, Mozambique and Malawi, particularly after the two devastating cyclones recently, and just look at the statistics of the terrible statistics that came out of that. 2 million people affected by single events. Over 1,000 people died from those events. And equally, $2 billion worth of infrastructure was destroyed. Now, that's $2 billion worth of infrastructure which those countries cannot afford to lose. And it isn't just a value issue. It's the long-term and the medium-term impacts that that loss has on the economic and social development of those countries. It pushes them back. And so our aim, particularly with the disaster risk financing efforts that we do, is to find ways to increase that resilience of those countries to those types of events. We know they're going to happen. We're pretty sure, even though it's uncertain, that they're going to get worse in certain contexts. So we need to find strategies, we need to find ways to support countries in their ability to improve their ability to be resilient to those. And that is a very broad set of things that we try and deal with, particularly, obviously, around providing funds, not only in terms of immediate humanitarian disbursements, which we do, obviously, and we like to partner, and we're very happy to partner NGOs and other agencies to help get that money to the right people at the right time. But equally, it's to leverage funding from other sources to help the long-term proactive resilience of countries to these events. So this is putting in place things which are what we call ex ante, effectively things that can be put in place before the events occur to increase resilience. And we have a whole range of options. The bank isn't just a bank in terms of the traditional sense, obviously. We do loans and we do investments. We have different areas of the bank that do that. We equally do grant aid. So we provide disbursement to countries, sovereign countries and others, to support that type of activity as well. So we have a whole range of tools that we can use financially to support countries and the populations in them. My area in particular, I work in the crisis and disaster risk financing team, as Mohamed said. That team has an aim, which is to develop the financial structures and the financial leverage of capital and technologies and expertise to make this happen for countries at the sovereign level particularly. And a key part of that isn't just the capital, it's building the capacity of these countries to deal with these issues themselves, whether that's in terms of building regulatory frameworks to allow, for instance, insurance to be applied in those countries more effectively, or whether it's the technical capability of, for instance, in public assets and infrastructure, helping countries to develop the ability for themselves to risk manage their infrastructure facilities, build them better, build back better, which is a great phrase that we like to use. These are the types of activities we try and support and to develop across the world. My own area of potential, for me, is mostly Southeast Asia. So I work particularly in Southeast Asia countries, particularly in the Ring of Fire. So not just from climate risk, but equally from earthquake and other volcanic type events and seismic events. So there's a whole range of issues that we have to deal with. And our aim is to help those countries help themselves effectively in the long term. From my team, there are four pretty basic objectives. One is we want to ensure that any financial disbursement or money that we can leverage helps and gets to those who need it most. So this is our primary aim. The next one is the financial planning of events and the potential events so that we can protect investment. As I said, for instance, infrastructure, making sure that any investment that goes into infrastructure is protected through its lifetime and probably longer than that. The third is helping countries to be forward-thinking, to be prepared for events, financially and socially, to be able to say if something like a tropical cyclone is likely to happen, they're ready to get the finances in place and delivered to those who need it most, that there are plans in place. And the third, and the one I think that's most important in terms of which tools, and we'll go into this later, I hope, which tools are most appropriate, is the speed of delivery of those funds to the people who need them, as well as allied to that, the transparency of those processes and the ability to ensure that the people who need it get it for the things that they need. I think George earlier said, he mentioned education, and clearly education is one of the most important areas, both in sustainability terms, but also in resilience. And so we do also support a lot of educational programs around the world, not only in the general terms for social protection and social development, but also then in the way that governments can support their own internal ability to create financial structures and also the civil infrastructures that they need. Very much importantly, that is the robustness of their regulatory and legal structures to enable financial risk transfer where it's appropriate.
Excellent. Fantastic, Matthew. Obviously, this sounds, financial protection is something, again, that doesn't sound completely unfamiliar to this room, presumably. So how does the bank operationalize, if you like, this idea of financial protection in a context, as we've seen from the video, that's slightly different to maybe most of the context that you operationalize financial protection?
Okay, another good question, and I think obviously I might have alluded to it already, but we believe there's no vanilla solution to disaster risk financing or disaster risk reduction management policies. We like to think of things as a toolbox. So we have a set of tools. Some of those tools are appropriate for certain requirements. And so our aim and our job effectively is to match the tools to fit the requirement that we have. And that can be so diverse. I mean, you can look at one country's needs against another. They can be very, very different, even though perhaps the perils, the hazards themselves are quite similar. The requirements and the ability of countries and communities to use financial tools and disaster risk financing will be very different. For instance, it could be cultural, as we know. It could be that the fact that there is no existing insurance program in place or the ability to use insurance. But it could equally be just the ability to fund or provide capital for certain types of events or risks. And so we have to be very flexible. We have to look at the needs first. It's a needs first, demand-driven activity, not a supply-driven activity, and match the potential leveraging, for instance, of private finance, as one example, to the specific needs of a country. And this is a long-term process as well. That's the other point. It doesn't happen in 6 months or 7 months. It can take years to develop. And so we have to take a long view, as much as we need to make sure that we're also considering the immediacy of some of the issues we have. So this is a complex, very time-consuming, very resource-consuming exercise for the bank, but that's what we're here for. And so we try and optimise that process as much as possible. The other thing is to mention is that clearly the types of things that can happen do vary. The timeliness and the time aspects can be very varied. So, for instance, if you have tsunami, great example, almost instantaneous. You have a seismic event that will then cause a tsunami-genic wave going into an area. That can take seconds, it can take minutes, at the most hours, as we've seen, and they can be absolutely catastrophic. Now, you can put things in place to preparedness plans for that. You can put financial things in place. But that's a very different set of requirements, for instance, to long-term drought or famine risk. And so we have to tailor